Let me share another piece with you, and this piece is taken from my forecast, The Ugly World of Tomorrow, my forecast for 2024 to 2030. And what I want to describe here is that we are expecting a major refinancing shock that could get very nasty going forward. And this comes not to a surprise. In my 2016 book, The Return of High Inflation, that basically predicted everything that we have seen until 2023 in great detail, I have a chapter there, chapter 7, Financial Institutions and High Inflation, a disaster waiting to happen. So I anticipated that already like 7 years ago. But you need to prepare. We're getting closer to this major refinancing shock. And why do we have it? Well, we have two developments that are very, very nasty, and they're coinciding. One is that we have so much more debt in the world, not only in the US, and it's not only corporate debt, it's public debt as well. And when you look at this from the 1970s, when we had the last big inflation crisis, we had much lower debt. The total debt back then, according to the IMF, was around 100% global debt. And in the US, it was not that dramatic that we had a big debt crisis back then when we went to this inflation crisis. Today, it's totally different. We have in every developed world a major debt problem. We have record levels of debt. You see a little fall in the debt to GDP ratio. That's basically the effect of inflation. Inflation eats up debt because GDP, in this case, GDP continues to rise, nominal GDP, but inflation pushes nominal GDP up while the debt stays the same, so the debt to GDP ratio improves. But we have still unsustainable debt levels. And that's the one side of the problem. And the other side is that we have a major interest rate reversal. And that came for many people as a shock. And you remember that quote from the head of the chair of the Federal Reserve, June 2020. So not that long before the reversal of interest rates actually happened, Mr. Powell said in a press conference, we are not even thinking about raising rates. And that was kind of like a reconfirmation for everybody who was piling up debt to use it for economic growth, that they're on the right path. If they're not changing the interest rates, why should that be a big problem? Unfortunately, very soon later, we saw something completely different. We saw a major increase in interest rates and a major reversal. When you look at that chart, the yellow line shows you almost like vertical rise of interest rates. That was a major shock because in the previous periods when interest rates went up, it was much slower. And here we had from almost like 10 years of not having any practically important interest rates, we had this major shock here that you see at the end. You see here how interest rates, for the longest time, practically zero. There was a little bump here, and then COVID came and it went back to zero again. And then all of a sudden we see this major hike here, and that was a major issue. That caught many companies on the wrong foot. But you may ask, well, economic growth is still okay in the US. It's not, and that's the content of another video that I published. We had 2.5% economic growth last year. And at the same time, the fiscal deficit of the US, only on the federal level, was the equivalent of 6.5% of GDP. So without the government spending like crazy, we probably would have a major recession right now. But we didn't have it because that kept the economy going. But that cannot go on forever. And that's why I think this is what's going to happen. We have these higher interest rates, and that hits 5 different groups very hard. It hits the government. 2023 interest rate payments for the first time had risen to almost 1 trillion US dollars. That's a dramatic number. It will hit the banks. The banks have many problems that I cannot even explain in this short video, but there are 4 or 5 vulnerabilities of the banks. I have it in my advanced inflation training where you can learn this. So it's very important. But you also have the consumers. The consumers are stuck with credit card debt, with consumer loans, and the economic picture is getting a little rougher. And now that they need more debt, a lot of consumers cannot refinance. And that's a major issue. And then we have the large corporates. So what I expect is a major refinancing shock that occurs probably at the end of 2024 or 2025, depending on the course of the Federal Reserve. And you need to prepare for this because that has the potential for being a very traumatic financial crisis. And I know what I'm talking about because I predicted back then the last financial crisis. And with my research back then, when I was a management consultant for a major consulting firm, we in great detail could show that we were on the road to a major financial crisis. But this picture, trust me, is much worse. It's much worse and you have to prepare. However you prepare, you can use the resources that I offer, my books, my management workshops. I work with big corporates around the world and also do this online or in person. In person, it's very limited. Obviously, I cannot travel everywhere in the world. But there are also online classes. And one class I think is very interesting is the Warren Buffett Decoded, which I will release soon, because Warren Buffett was the one who is, I called him in my book, the king of inflation. In the 1970s, he was just tremendously successful in turning inflation risks into an opportunity. So read about him, watch YouTube videos about his 1970s strategy, or take this class. I make it very interesting, very short, that you get the most important features of this exceptional man. And what is he doing right now, Warren Buffett? Well, stock markets are at record highs and his cash levels as well. And that's the same strategy that he did in the 1970s, exactly in 1972. The S&P 500 went to an all-time high. And what did Warren Buffett do? He was out of the market because a little bit later, when the second inflation shock hit the US, stock markets lost about, the S&P 500 lost about 50%. Okay, so prepare for a major refinancing shock. It would be very surprising if we get out of this mess without such a shock. And good luck in doing so. If you have any questions, use the comments, send me an email, contact me. Thank you very much.